Ever pondered over how traders forecast market trends? Much of it comes down to a nifty tool known as the candlestick pattern, a visual representation of price movements in the financial market. It's like a secret language spoken in the dialect of price action for a specific time frame. It might be a day, a month, or even just an hour. The choice of the time frame is up to the trader. A candlestick isn't just a line on a chart. It's a story of price action told through four key components. 1. The candlestick body. This is the rectangular area that stands between the open and close prices. It's sometimes filled, sometimes hollow, and this body can be a telltale sign of market trends. If the body is green or white, the closing price was higher than the opening price. If it's red or black, the closing price was lower. 2. The upper shadow or wick. It's a thin line that reaches up from the body, the tip of which shows the high price of the time frame. 3. The lower shadow or wick. This extends beneath the body, marking out the low price of the time frame. Now these candlestick patterns fall into two camps, bullish and bearish. Bullish patterns hint at a likely rise in prices, while bearish patterns suggest a downturn. Bullish patterns include the bullish engulfing pattern, where a small bearish candle is followed by a larger bullish candle that engulfs the previous one. It's a hint at a potential reversal to the upside. Similarly, the hammer, a single candlestick with a small body and a long lower shadow, suggests a bullish reversal. The morning star, a three-candle pattern, also hints at a bullish reversal. On the flip side, bearish patterns like the bearish engulfing pattern, the shooting star, and the evening star all suggest a potential bearish reversal. But bear in mind, these patterns are not a crystal ball. They are tools, and like any tool, they work best when used correctly and in conjunction with other forms of analysis and risk management strategies. They can provide insights, but it's up to the trader to interpret these insights and make informed decisions. Therefore, understanding these candlestick patterns is essential in the world of trading. It's a language that, once mastered, can open doors to predicting market trends and making strategic trading decisions.